Hey everyone, I'm Stephen Kalayjian, and welcome to Back to the Futures this Thursday here. We're here every Tuesday and Thursday from 1:30 to 2. Wow, what a historic day here. We had the S&P futures punch through 6,000, hit the O2 level, and they just dropped 10 handles, okay? It was just a matter of time. Today they were fluctuating between the 90, 93, 98. But we had a really great pattern here on the 5-minute time frame this morning, right around the 11:10 time period. And it was a really great pattern. And when you look at this pattern, it was the first pullback that we got on the 5-minute time frame this morning. The key thing here, okay, the key thing is that when you see these negative MACDs on the 5-minute time frames, and once you get overbought on the 15s, the 30s, and the 60s, and they all aligned, right here, this was a non-confirmation move, meaning you made a new high, but the MACDs did non-confirm, right? So it was an easy one. I waited. I said, you know what? We're going to short the new high. And people are like, why? You want to short the new high? You want to short the new high? I'm like, yeah, because of the non-confirmation. It was the pattern, right? It was clearly the pattern that set that up. And so what you want to be able to do is to be able to recognize, okay, to be able, wow, look at the S&P is dropping here. All right. Again, beautiful pattern. Some people are still short. I mean, they covered, it did drop about 10 handles, 12 handles from here. They pushed up again, had a little sell divergence here on the 3-minute time frame, and they just dropped about 5. But again, the one thing that I will tell you, okay, is that when you're trading the markets, okay, you want to be able to be in a situation that you identify these patterns and these trades, right? And it's important to recognize, it's important to realize that these patterns repeat themselves. And so when you're looking at the S&P futures, the index futures, I also look at the underlying ETFs. So when we made new lows on the SDSs, the Pro Ultra Short, the SDSs, the MACDs did non-confirm. So everything I do is predicated on buy and sell divergences, okay? All right. And so the SDSs did not make a new low. Okay. This meaning that the MACDs did not confirm the new low. Okay. So with that being said, what's important, all right, is today at 2:00, the Federal Reserve is going to announce an interest rate cut of, I think, 0.25%. Now, do I agree with that? No. I don't agree with that at all. And the reason why I don't agree with that, okay, is because, number one, I think it's priced in. Number two, we're at 6,000 on the S&Ps. Why are they cutting interest rates? Food prices are still significantly higher here. All right, 20%. It's going to take months before the president-elect Donald J. Trump comes into office. And then on January 20th, you're going to see within a week, 900 things get done, right? That's just the way he is. He's not wasting a minute for the American people, right? But again, what we really have to do here is we have to just look at the patterns, wait patiently, right? We're being patient because, why are we being patient? We're being patient because of the obviously the Federal Reserve coming out and talking here at 2. But today is a big day, right? Today is a big day because you have the Powell's doing the Fed Chairman Powell is doing a conference call at 2:30. And that 2:30 call, okay, is something that you're going to have to see how he stands going forward, okay? How he stands going forward. Is he going to cut? Are they going to start turning dovish, or are they going to start turning bearish here, right? Or are they going to just say something that just says pretty much that, We're going to data dependent. Data dependent what? I mean, it just makes no sense. But anyway, the S&Ps are down about 12 handles off the highs. Hit that 6,002. Listen, so let me just tell you a little something, right? I'm sorry my office looks like this. I have electricians coming today. I had to pull everything away from the walls, and sorry. But, one thing I will tell you is that when you're trading the markets, I keep telling you that everything I do is based upon combination theories. And when you have combination theories, I'm looking at using multiple time frames. My combinations of the 15 to 30 and the hourly for intraday trading. But then when you look at the indicators, I use indicators 1, 2, 3, 4, and 85% of the time I use indicators 1, 3, and 4, and 85% of the time I'll use indicators 1, 2, 3, 4. And then I use multiple time frames. And then I use all this in a combination way of trading. And this is how I detect the patterns I see each and every day. Okay. Really, really, really great patterns. Okay. And when you're looking at the markets, okay, and people say to me, hey, today a bunch of people say, I want to learn how to trade futures. I'm trading stocks or I'm trading options. I'm like, okay, great, no problem, no problem. And then what happens, right? So they start learning. They start learning how to execute on the matrix, which is I call the ladder system. But more importantly, after that, what you want to be able to do is then you go from paper trading, because you have to learn how to execute your orders, put your orders in, get filled, raise your stops, etc. And then what you want to be able to do is you want to be able to then be in a situation and in a position that when you're trading the market, you want to be able to do what? You want to be able to be consistent. So you go from paper trading to micros. From micros, you go to the big ones, right? Now, obviously, this pullback we had just now, if it wasn't for the Federal Reserve coming out with an interest rate decision, I would be doing what? I'd be buying this pullback on a 15-minute time frame. So the S&P just ran about 3 just now, sorry. And I would be looking to be buying, into this pattern, okay? Very, 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 very important, okay, to learn to be consistent, right? Today, I'm very fortunate to say that in my live stream during the day, we had some phenomenal, great calls, couple of great longs, couple of great shorts, whether it's individual names or we're looking at, obviously, the indexes. Gold yesterday got absolutely decimated and then down 75 points, right? And then boom, today, what is gold up? 28, 29. Actually, at one point it was up 30, right? Great pattern on gold on the 15-minute time frame. Again, when you're looking at the futures markets, you nearly need to be looking at the underlying ETFs, what I call RTH real-time hours. And the reason why I look at what's called RTH real-time hours is because I don't look at pre-market or post-market data, right? I only look at the market from when they open at 9:30. Now, the continuous contracts, the futures markets, index futures, commodities futures, financial futures, all trade over 23 hours in the day. So when they align, right, when one aligns with the other, then I know which direction the market's going in. And whether it's 2 or 3 indicators, well, I can have a buy on the 30 and the 60-minute, but the 15 is negative. I'm still looking to buy based upon the 30 and 60-minute time frame. If I have a buy on the 15 and the 60-minute time frame, well, there's strategies for that as well. Okay. What's really important? Okay. What's really important is to be able to really focus, okay, on trading the markets to be consistent. Whether you're trading the gold market, the oil market, like, for example, today I had buys on the USOs, right? And I'm looking at the oil markets, and once I got the small little time frame, like the 5 minute, and they reversed right to buys, I was looking for pullbacks, and very, very, very good patterns there. Okay, very good patterns there. Okay, what's important, okay, is to when you're trading the markets, you want to be in the situation to be looking at the divergences, right? So I'm just going to bring up the diamonds really quickly here because, again, I don't trade the YM futures, but people do. I mean, here we go right here. We're making new highs right here. You can see where my cursor is. You got the overbought on the 15-minute time frame into the negative MACD. That's a no-no. That's a complete no-no. What's a no-no, right? A no-no, okay, is you're getting overbought into the negative at MACD. You're making new highs, non-confirmation. It doesn't get any better than that. That's a Picasso. Okay, look at the IWMs, the identical same pattern. 15-minute time frames. You're making new highs here. Okay, you're making new highs right here. 1, 2. You're making new highs here on the 15. Look at every overbought condition. Unbelievable shorts. Unbelievable. Okay, these are beautiful, beautiful patterns. Okay, these are beautiful, beautiful patterns. All right, and when you look at the market, you can see and you can say to yourself, right, wow, you know, I know this pattern. You're getting overbought. You got overbought conditions, and here's the better one: the 30-minute time frame on the Russell. Okay, the MACDs are negative. If I switch this here, in fact, we just switched. Here's the 15. Let me just take the 5 off here. I gotta, if I remember how to do this. Okay, the time frame. Let's do the 30-minute. You can see the MACDs are negative on the 30-minute here, right? So if the MACDs are negative on the 30-minute, okay, and what are you looking at now? Well, you got the MACDs negative on the 15, MACDs negative on the 30. The first one right here, if I draw my cursor, what time is this? You can see the MACDs are just starting to cross negative on the 30-minute time frame from above my pivot line. Well, that's great, okay? That's great, but remember one thing, right? Remember one thing. The MACDs on the 15-minute time frame are non-confirming. You're getting an overbought condition on the 15-minute time frame into the negative MACD at 10:45, and then the second one right here, okay, was at exactly 12:30. So you had two great patterns on the 15-minute time frame, and instead of trading the IWMs because it's very expensive stock, you can go to the TNAs, you trade the RTYs. You just trade the RTYs, right? Very, very, very powerful. Very powerful. Okay? Very, very powerful. All right. And the thing that you have to realize, okay, is that when you're trading the market, and the same thing with the diamonds, right? The diamonds, the 30-minute time frames were negative as well. So when the MACDs are negative on the diamonds on the 30, you can see the power right here of the right here. You can see the MACDs are negative, and you can see right here. Look at that. That is an absolute beautiful pattern. An absolute beautiful pattern. Both MACDs are negative, the 15 and the 30-minute above my pivot, right? The 15 gets overbought into that, fade them. You could short the YMs, right? You could short the YMs. That's a beautiful, beautiful pattern. Beautiful pattern. Okay? All right. Does anybody have any questions at all? Anybody? Okay. No? Nobody? Okay.
There's a comment, Steve.
Okay. Long SQQQ for maybe a few days in time frame just for a try. Seems Q's a big spended. Listen, the SQQQs and the SDAOs did a reverse split because they were like $7, $8, and the S Dows were like around 12. Okay. The next one that's going to probably get a reversal to this is going to be the TZAs, right, which is the triple short for the IWMs. So if you look up the Qs here, okay, let's bring up the Qs, and we'll switch this to a daily because that's how you're going to trade these, really. Okay, one day here. If you see in the right hand corner, you're $18 away from the 10-bar weighted moving average, right? You're 10. You're excuse me. You're 10. You're 18 points away. 18 points away from the 10-bar weighted moving average. That is unbelievable. Unbelievable. So yes, maybe, I mean, you got the reverse split, right? So you got less shares now, okay? And you got ... here. So really, but again, you know, what you're going to end up doing here, you know, I think you wait patiently, okay, for some type of a pullback on the daily to exit the, you know, you wait for the Qs to get oversold, and then I would look to get out of the SQQQs, the inverse, obviously, right? So that's that. Okay. Let's see here. 30. Okay. I'm just looking at. Okay. All right. All right. Well, again, like I said, it's if you look here, you can see right now. Well, we're waiting. We're waiting for. Let's see here. Coinbase is beautiful. Okay. Okay. Let me just. Okay, so what we're waiting for now, obviously, we have the Federal Reserve at 2 o'clock. They're going to announce. Now, listen, the last time they cut interest rates, 50 basis points, the 30-year bond market was trading shot up to above 127. Shot up above 127. That's insane. That's insane, right? So now, what you want to be able to do, right, is now what you're seeing here, okay, is the bond market dropped from that high 10 points. So when the bond prices drop, yields go up. So they cut basis. So really, by cutting 50 basis points, did nothing because the bond prices dropped and the yields went up. It did nothing. It did nothing to the housing market. It did absolutely nothing. Okay, it did nothing. So what you really want to remember, and the aspect of this is, if they cut interest rates today, it doesn't mean the market's going up, right? Again, it's all, you know, we've went high here. We're not going back to 0%. And when you make new highs on the S&P the way we did, I don't see how in God's creation they could cut rates when the S&Ps were touched 6,002. First time in my lifetime, right? So, you know, it's all predicated on, you know, the beliefs of, you know, what we're seeing here, okay? And in regard to the markets, okay, in regard to the markets, so I would have been, if this wasn't let me just change this right now here. If this wasn't an FOMC day, okay, let's see, how do I change this? Let me just put this back to a 5-minute. If I bring up the spiders here, you can see why I would have been buying S&Ps here. Okay, 88 and a half, just ran 5. Look at these 15-minute time frames. I'm getting oversold. Okay, and I have a rising ADX. I mean, look at this. I have a rising ADX on the 30 and 60-minute time frame. So the pullback on the 15, I would have, if it wasn't for this FOMC meeting, I would have been buying the market there. Okay, it would have been an absolute long, okay, an absolute long on the market. Why? Because what's happening is this is the first pullback on the 15-minute time frame. S&P futures got down maybe 88 and a half, or something like that. And then and then what happened? And then they just exploded. Okay? So that 15-minute time frame, that was a really great buy on the S&Ps there. NASDAQ futures just ran about 25 here. Okay. So everything's set up right into the FOMC. S&Ps just ran 6. So if it wasn't for the FOMC, I would have been buying those S&Ps like between like 83 and a half, 84 and a half, 88 and a half range. Probably would have gotten a couple. All right. But it's all good. Again, so as far as the SQQQs are concerned, I think the market is overextended. Okay. The Qs are obviously new highs here on the Qs. The old high was, I think, 505. Doesn't mean we can't go higher, right? So let me just tell you a little thing that happened to me about a month and a half ago, a little about maybe 5 weeks ago. So you know what a bad, look at these S&Ps. So you know what a bad tick is, right? So a bad tick, okay, is something that's out of sequence from the exchange, and then boom, you just get like a bad tick. I got 99.9999% of the time, I get them on ETFs and stocks, right? They've been better. So I came up with a program one time when I built my own overlay, and I was able, once the bar completed, I had my developers, I could click on it, and it will fix the tick almost to the penny from where it should have been. And then all the math on all the indicators got fixed at the same time. So last week or 5 weeks ago, I get what? A bad tick on the S&P futures. I'm like, I never got a bad tick on the S&P futures because it's dynamic, it's continuous, right? And I said, what in God's creation? 65.55 or 55.35 or 55.85, I forgot. It was over 6,500. And I said, that's where the S&Ps are going. In my 41 and a half, almost 42 years in this industry, I've never had a bad tick not go to that price. It might have taken months, but I write down the bad tick and I just keep it. And so 65.25 or 65.85 in there is where I believe the market is going to go. Not now, not tomorrow, sometime between now and the next 6 to 8 months. And then let them have them. Let them have them, you know? So that's that. Anybody have any other? And by the way, I do a live stream every day from 9 to 4 with my community. There goes the S&Ps just ran 7. So if you bought one contract and you're up $350. If you bought a micro, you're up $35, right? If anybody has any questions, I do hold a live stream every day from 9 to 4 nonstop. I do futures markets, trading, on equities. Well, S&Ps 9 handles, 8 handles here. And then there goes Microsoft right back up. 10 handles on the S&P, right into the FOMC. We got 5 minutes to go. And so
there's a question.
Oh, where's the question? Aaron Gutierrez. Weekly Dow Jones outlook. Weekly daily outlook on DJ Dow Jones transports. I don't look at the transports. this is really, well, again, this show is for futures, but I don't look at Dow Jones transports. If anything, I look at just the Dow 30 names. That's all I really look at. The other thing I want to, if you want to give me Donald J. Trump, the stock. Well, it got crushed here. It was trading, I think, over 40 yesterday, and today it's just getting annihilated. But I got to look at it. If you want to give me a call, 914-500-7484, Aaron, I can, potentially look at it and go over that with you, okay? Again, the most important thing is being consistent trading futures, right? My 5 key words: consistency, discipline, confidence, patience, and passion. And then what you want to be able to do is then focus on the your when you hit your goal, you stop. Okay, I do a live stream every day from 9 to 4. If anybody wants to join that, just text me at 914-500-7484. And those of you who want to learn to trade futures, I'm here to help. I'm here. My legacy depends on your success. I want you all to learn. But more importantly, what I want is the ability for all of you, okay, to be able to be consistent, to be and remember, if you can make $500 a day, that's $125,000 in a year, right? And with the volatility that we're seeing and these patterns that we have each and every day, well, guess what? It's doable in my book, right? Okay, gold is now pulled off about 5 in the last 20 minutes here. Again, the 30-year bonds, you're going to see some crazy behavior, but it's not what the Federal Reserve says at 2 o'clock. It's what he says at 2:30. So as an experienced trader, what do? I let the dust settle. Right? Okay. Any other questions? Nope. No other questions? Okay. Let's see what this DJT is doing here. All right, let's go back to the spiders here. This is the 30-minute time frame. You can see we have a gap here. We get this monster gap here. We got gaps. So eventually, I think in the next couple of years, you'll see a caboose down to 4,200, and that'll be set the stage to a move. If you take the measured move, let's say you get to 6,500, 42. You're gonna go like to 7,000 or something like that eventually on the S&P. So, all right, let's see here. Okay, we have about 2 minutes to go here. We got the FOMC at 2 and the press conference at 2:30. Obviously, it's going to affect the bonds, the gold, the index futures. Okay. And it's not so much the rate cut or no rate cut. It's the message he's going to present at 2:30 when he does his 30-minute press conference. Okay. All right. What else? Okay. Again, just got to be patient. And I'm the type of guy with my over 41 years of experience. What do? I wait for the dust to settle. Everybody have a great day. Thank you for joining me here at Back to the Futures. I'll see you next Tuesday at 1:30. Have a great rest of the week and have a great weekend. And God bless you all. And God bless the United States of America. Thank you.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.